Good afternoon, James. Thank you for coming to talk to us today about the FX industry.
Thank you, David. It's always a good chance to catch up.
James, after a period of considerable turmoil in the FX industry, I think now is a good moment to kind of take stock a little and look to the future, take a strategic view. I mean, what are the big issues that our members are focusing on at the moment?
Well, I think you can't move away from the whole conduct agenda, but what we are starting to do is have a chance to step back and look at the industry in a slightly more holistic way. And I think there are, to me, a number of building blocks that you can start to see coming together, impacting the shape of the business going forward. So on one hand, we have all the capital rules, which are now starting to come in, and we're looking at things like the fundamental review of the trading book. We have the market side, the G20 initiatives, so the trade reporting, clearing, margining coming in September for uncleared derivatives, and the whole structural side on the pre-trade transparency side with CEFs, and then turning our mind towards MiFID. But I think equally as important, and something that is starting to really weigh on people's minds, is the whole conduct agenda as well, which is rapidly sort of moving up the ranks, both from a reputational damage point of view and the need to rebuild trust and confidence, but also, it has real cost to it as well, as we've seen from some of the enforcement actions. So those three elements are really starting to reshape the industry.
And the third is the conduct element, which is, if you like, a new pillar of regulatory consideration for our members. I mean, where are we going to go from here then? What do you see as the most significant developments?
Well, I think in that one in particular, we've obviously seen enforcement actions in the FX industry, and be in no doubt people have taken that extremely seriously. There is a need to rebuild trust and confidence in what is an extremely important part of the industry. It supports global trade, it supports global investing. You need confidence in that. But what you've seen, of course, is people have to take a step back and look at an industry that has grown organically over time and take a look and say, what are the business practices? And for me, there are a number of key areas that, if you like, are coming to the fore. One of them is, what is the nature of my trading relationship? And you get into debates around principal versus agency or agency-like type activity. And I think that's a big question. Funny enough, though, that is broader than just FX. That's a FIC question, and that's something I'll return to perhaps. You have other areas about what constitutes market color, information control, both externally and internally. How do markets move? Of course, they move based on different views. Are you allowed to share those views, etc.? So I think that's important. And from the WMR, there was lots of talk about segregation of your business lines. Should you have physical separation, or is it technical? So those things are really starting to weigh heavily on people's minds and how they structure their desk. So I think you've already started to see a level of change around that.
And how does the Fair and Effective Markets Review fit into this?
So the Fair and Effective Markets, of course, was kicked off by the Chancellor of the Exchequer. There was a tripartite team with the Treasury and the FCA. And I think that, along with the Bank of England, and that group was very clear in what it was looking to do was enhance standards. One of those was clearly across foreign exchange. Foreign exchange is global. Work has been done within the FMSB around this. You remember the original Fair and Effective Markets report. But I think the other positive that came out of that, some of the work that was looked at, was the creation of a global code. And so we're very pleased that under the BIS, they are moving to create the global code for foreign exchange, which, if you like, will bring together all of the activities around the world. After all, this is a global asset class with global players. People need to have a single standard that they look to operate to. And I think that is a good piece of work that will move forward. So I think we can see more coming out of that BIS work going forwards.
So there will be more global codes for other activities in financial markets generally?
Well, I think this is an interesting challenge. Of course, the FMSB, or the Fair and Effective Markets work, is effectively a UK initiative. But I think if you look at all of the participants, they are, of course, global. Now, in the FX space, we have the machinery in place through the central bank committees, the FX committees. That's been there for a number of years. And of course, that can be harnessed to start creating this single code. And indeed, a few years ago, they had created a global preamble. What you're seeing now is the expansion of that into the full code, drawing on various best practices around the world from different groups. That's a good news story. I think within the other asset classes, they are generally slightly more regional. Fixed income, equities, commodities, etc., rates, credit. The question there is, is there a similar coordinating body? There's been discussion of FSB, IOSCO, etc., and all of those have got conduct on their agenda. I think one of the most important drivers, though, will be the more bottom-up, which is that global firms don't simply want to implement a code or improve conduct in one region. They want something that they can roll out globally. So you may see this coming from both angles. One, if you like, a supervisory push towards single codes perhaps, but second, firms themselves saying, we want to implement something here globally. And if you pick up on that, of course, the FX code that'll come out, does that start to give you pointers? If you're looking at FIC, one of the questions you have to ask yourself historically is which parts of certain enforcement actions in some product classes were not thought about in others. And I think that's something we as an industry have to do better, is read across from one asset class to another to say, this does have application. So a global code for FX, is it meant to be a global code for other asset classes? No, of course not. Does it raise questions for other asset classes about whether they should or shouldn't follow a similar set of guidance? I think that's a good question.
And so we are seeing already some fundamental changes in the way that banks organize themselves and the way they behave.
Absolutely. I think just clarifying the nature of your relationship with your clients makes you start to think about your business differently. And that for me is a real watershed. That sits at the top of all of this discussion, which is, am I trading with them on an on-risk basis, i.e. I'm taking on that risk, or am I facilitating a trade for them? And that then filters into many aspects of the trade relationship that you have with them. And that's an important factor because, you know, like many things, it's only after the event when something's gone wrong that everyone goes back to the basis of, well, what were the obligations that we both have? Why not try and get that much clearer, much sooner in the entire relationship? And then, of course, you know, the way in which you trade thereafter is clearer to both counterparties. And I think that is critical to me.
And so a final question, where do we go from here, James?
I don't think anybody feels that the conduct agenda is finished, as it were. I think you have got to rebuild that trust and confidence. So I think what you will find from here is that certainly in the UK, of course in Europe with other new regulation coming in, for example MiFID, into the US, etc., with all of the fines that have happened around the space, I think you have to see that this will be an agenda topic that will run and run. Now, a lot of the challenge will be in the evidencing of what you're doing. So what can we expect? I think you can expect more clarity in the trading relationships that you have with your counterparties. That in itself will not be enough to rebuild trust and confidence. We will be expected to evidence what we've done. I think the history, sort of the baggage flows with us. So that means that there will be greater requirement for surveillance and monitoring of conduct. There will need to be sort of cultural rebuilding in terms of what people think in their heads is the right activity that people should have and the right attitude towards their clients. Those two things go together. But you can't just say you're going to do it, you're going to have to evidence it. So increasing spend on compliance, increasing spend on systems, surveillance, monitoring, what does good look like? I think there will be opportunities for the industry to put that in place on a forward-looking basis. It will come with more cost, it will come with higher compliance hurdles, but I think that, unfortunately, because of the legacy of where we've come from, is something that we're going to see going forwards. And that will, of course, be one of the tools for enabling us to rebuild trust and confidence, to demonstrate that we are, you know, truly wanting to make a better industry that's fair and effective.
James, thank you very much.
Thank you.